So hopefully it does it with my thumbs up. That's where the video starts. For the recorded side of this, I'm going to go ahead and turn off my air conditioner so you're not listening to the to horrible weird noises in the background. However, what we're staring at here might be... All right, so we're going to start off with, before I turn on a little bit of background music, I don't want to distract anybody, with what I think is the culmination of how to view the crypto charts right now, particularly in light of XRP news, which didn't get much follow through, and the stock market really looking pretty strong, but Bitcoin not following it. And right now on this screen over here, you're looking at Bitcoin versus the stock market, or the US 500 squared, but so you can see the exaggeration. And we're going to piece this together, and I'm going to show you why this is the most important thing really to be looking at. So, and this took me a little while to piece together earlier this morning on the Discord VIP call. So here's why this chart, I think, might be among the most important, if not the most important in crypto right now. Because if you go to the US 500, it just got above a 1 year long channel line that was resistance, used that support, made a higher high, made a higher low, and broke a second higher high on the hourly time frame. On the daily, it looks even better. Look at that. Look at what it did on top of that. Whew. Why is Bitcoin not following this? So, I mean, that's a year-long channel. I mean, here, zoom out. And look how it broke above it. Okay, now obviously you can't see it over here, but just to see, this is September 2022, and we just zoomed in on how it broke out. Okay, now, what the hell is Bitcoin doing? So, is Bitcoin postured in general terms to bounce? I think the answer to that is hell yes it is, because it's at the very, very bottom of the 8 month long, so not quite a year like the stock market, but it's at the very bottom of an 8 month channel. And usually in macro channels, you long the bottom and short the top until it doesn't work. And back here, it technically didn't work because this was, I guess in hindsight, either a bear trap, or it really was going to fall off, but then XRP news brought everything back up. Or no, BlackRock. So this was BlackRock, I apologize. Then the BlackRock ETF news brought everything back up. But it is more likely that folks knew the BlackRock ETF. So this is back in June, mid-late June. That's when the BlackRock ETF news came out. But it is more likely, though, that this was a bear trap, actually. Driving things down before the news was released. In hindsight, it probably was. But here's the thing, though. This is an 8 month long channel. Even though the first one was a trap, okay, most likely, if you go below a macro channel or a mid macro channel twice, you're more likely not to go back into the channel again. It's way more likely than falling out at first pass, which technically is still likely the way it did this. Went below an origin line, went like... It really, at that time, before the BlackRock ETF, it was more probable it kept correcting on the micro and short and perhaps even midterm timeframes. Even the daily and 2 day were down. This statistically more probable until that trend line was broken that it was going to go down. And that was one of my last YouTube videos, like right after it had broken out, which I thought was the second most probable scenario out of the resolution of this triangle back in June. Okay, and I've gained a lot of weight since then. So my body's starting to work again, thank goodness. All right, but Bitcoin typically bounces at the bottom of macro channels. The stock market is breaking out. And Bitcoin is not bouncing from that low end point, from the bottom of the channel. So what does this mean? It means that if Bitcoin is just hanging out, like incognito, and it is getting ready to bounce hard, okay, which honestly it really should. It should follow stocks. It has, for a long time. Then this chart will show you when that will happen exactly. Like exactly. So not some, as opposed to zooming into the bottom of this channel and looking at, 5 minute bounces and this and that, like going down to the, no, that's not going to show you when it's happening, because it could just, it could flounder around here, or even sort of follow stocks, but not aggressively, and go all the way up to 30,800 and get rejected by the by the origin line, which is way below the 1/4 line. It'd just be essentially a lower high on about the 4-hour time frame. Higher high on 15-minute and below. So if Bitcoin bounces from here and this chart, US 500, Bitcoin versus US 500, it doesn't do some type of V-shape, then Bitcoin's not really going anywhere. And so therefore this chart, assuming, so this is how you put this together. With the assumption the stock market keeps going up, then Bitcoin is not really doing much of anything until this flips green and Bitcoin starts outperforming the stock market. Because stock market performing well on a day is like 2%. And usually when Bitcoin is going up versus that, I mean, it's doing 3 or 4 times the percentage. So you're looking at 6% moves a day, right? Or even 8%. Really strong moves when the stock market is both going up and Bitcoin goes up against it. That's your 5 to 8% single days in Bitcoin. You can get 2 or 3 in a row because if this flips green, because the US 500 is experiencing something exceptionally bullish right now. Like this is really good. Like honestly, the buy pressure, it looks like it's getting ready to accelerate. So Apple should blow through, right? As long as this ain't a trap, which it could be, but it doesn't look like it. This looks very, very confidently bullish. So, I mean, it kind of appears that Microsoft and Apple are, I think Apple's already passed its all-time high. Microsoft's right at it. Like they're going to not just bust through, but they're going to keep on charging. That's what this says. Now, should the US 500 come back below here, get rejected, then those things are probably going to pull back and things might cool off for a while. But Bitcoin's not following it, everybody. So if this chart right here does not flip green, then Bitcoin is just going to miss out on this rally, and it's going to stay in this darn zone and or fall out of this channel. Like Bitcoin this is 27 days of sideways in the same 4% area. And it's at the very bottom. So it's both at the bottom of its horizontal. I guess if you could see all of this as a range up here between 29.9 and 30,009. So 29. So in that $1,000 range, a $1,000 range, which is I think about 4.5%. 29. No, it's 3.5%. So it's at the bottom of this 3.5% horizontal short-term time frame range, and at a bottom of a mid macro. So it's at the bottom of 2 different ranges. So if that other chart flips green, it's going to pop hard. And then the next target, I mean, it's going to be the very immediate next target. It could be upwards of 34 and change. 34.5, 34.4. It would be the bottom of the point of control of the channel if you get a nasty, nasty pop up. Yeah, 34 and change. And that is what's at stake. So there's a huge difference in what's getting ready to play out. And so it's not depending on this chart, the Bitcoin versus US 500. It's not dependent. This chart won't make it go that way. No, this will simply show you when it's actually happening, as opposed to price just kind of bouncing on the line, right? This is not the chart that'll make it, but it will tell you, holy crap, it's happening right now, and it's probably going to 34. Does that make sense? So it's almost like a cheat code right now. And this chart is typically not that way. Like this is clear, cut, and dry. Clear, cut, and dry cheat code. Very, very simple for an excellent, potentially long position. But I wouldn't want to be long unless the cheat code gets activated. And I cannot stress. So the last reiteration, that is only in the event that both the stock market keeps making higher highs and not pulling back, which it is right now. It's busting out. So stock market keeps busting out and this flips aggressively green. That's what that would mean. And if it doesn't happen, inverse, that either means one of 2 things. Bitcoin stays under the origin line, which is about 30,800, or it begins falling out of an 8-month channel, which would be its second pass, and that would be more bearish. But we don't know which of those 2 are happening right yet because it's still stuck at the bottom of the line. So we're either going to see, so under the assumption the US 500 versus Bitcoin versus US 500 doesn't flip green, it'll either make a lower high somewhere around up to as high as 30,800, or it's going to come out, right? Those are your 3 price paths. 34 and change, 30,800 for a lower high, and then falling out of the channel. And then your next immediate target would be about 28,200 for that. So those are your 3 price bets. Okay. But Bitcoin is still, just don't forget though, it's 26 and a half days of going sideways. We haven't broken that yet. All right. But I always like the cheat code though. Okay, just cheat code. So that's really all I wanted to talk about for Bitcoin. I will go ahead and turn on a little bit of the lo-fi chill music real fast. And let's get going. Here we go. All right. Hey, Cranny. You sold all your KASPA at 3.3 cents yesterday. As the sideways turned into a descent or a decent pump, can you have a look for a buyback in the zone? Definitely moving into overbought zone. Overbought zone. All right, KASPA making another move up, it sounds like. So let's go take a look. Why don't I have this saved? I think I use it on the max chart, right? Yep, 3.3 would have been selling into the point of control being used as resistance. 3.3, perfect. Yeah, that was a good play. And if you wanted to, I'm not making any suggestion, but you could already buy it back at a 6.5% discount. But after the fees of buying and selling, you're probably 5% better. So you have a 5% discount already from having hit the sell button. I'm going to have to rely on indicators because the trend is up. I mean, it doesn't look like it's going to turn around. It doesn't look like it's going to go much lower, really, on just basic price action because the trend has really been maintained. I mean, the 1 hour RSI coming all the way into the red zone while it's maintaining higher low status. I don't know, man. I think it's getting ready. It looks like it's going to go up more. I mean, you have straight up higher highs and higher lows. And it just made a strong higher low as the 1 hour RSI got into the red zone. And so if the 4 hour RSI makes a lower high, that's still a higher high in price. Because when the rule, I think that's the rule for altcoins too, but it is for Bitcoin though, is when the 4 hour RSI even dips its face, like dips its finger up into the green zone on this RSI with EMA and control zones, that is a higher high in price every time. Even when it grazes it, like it doesn't actually enter, it just grazes it. That's still a higher high in price on the 4 hour. Not necessarily the 1 hour though. So it looks like to me that it's gonna make another higher high. Let me look at the daily. So the lower time frames are suggesting that this is going to keep going. It doesn't look like it's gonna come way down here. However, so here would be the trick. If the 1 hour RSI, so I would actually go off the 1 hour. As of right now, it looks like it's getting ready to make a higher high. The way you'll see that it's not, that it's going to lose the power of that, is if the 1 hour RSI goes both back above this EMA, makes a lower high, so something like this, makes a lower high, and the moment you can know, uh-oh, it's actually not happening, is when... Really? Is when right here, when it gets stuck under that EMA. So this moving EMA, so you confirm a lower high to that one, but you can't do it here because it's going up. It's when it goes down and does this and gets rejected, not until this tick right here. This one right here, can you tell? Because on this tick, it still looks like boom, 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 and boom. You still can't tell. You cannot tell until this tick right here. It would look like that. It would look almost exactly like that. I mean, honestly, or worse, or worse. Like maybe it doesn't go up that high and it only does something to this effect. But still, it would be on that tick right there, and it would go under the RSI EMA, and then look exactly like that. And that's the exact moment you can tell. Oh wait, the indicators are going to, or no, the low-term time frame indicators cannot stop the needed pullback on the daily. And that's what you're seeing. Like the daily does look like it's a little heated here, and it looks like it could pull back for 3 days and still be even 4 days and be pretty bullish. Actually, over the next week, it could pull back. It could have 5 red days and 2 green days and do something like this and still be, I mean, and look, I mean, that's 7 days, 5 of which are red, and it's still a bullish pullback on KASPA. But the low time frames are saying that is not going to be initiated. But the daily does say that that it could use a pullback, and whether or not you get that, you'll see it on the 1 hour. However, as of now, the 1 hour suggests it's going to keep going. All right, that's KASPA. It looks strong to me. I mean, I wouldn't be hesitant to try to, you know, maybe what you could do is this. Since you have a red daily candle here, I mean, that looks like a pretty decent sized pullback. So maybe you could say to yourself, all right, well, let's just say if, you know, you close a bullish engulfing 4 hour candle. I will wait. I will re-enter, you know, at a 4% better price than where I sold. I'll re-enter on the next 4 hour backfill. And assuming it flips green, I will put my stop right under that wick on that next 4 hour backfill, assuming the current one ends a bullish engulfing. So then you zoom in and be like, okay, let's say it ends here. You want to try to catch a backfill, you know, with limit buys and all that, you know, maybe even down to here to 309. Something like that. 308.50. For example. If this closes that like this, engulfing, which means this green candle is bigger than the previous red, then you're looking for to re-enter on limit buys between where it closes and down to 308, with the idea then that it backfills to some degree, maybe not all the way down, but then it flips green. Then you will place your stop directly under the wick that it made on its way down. However, if it starts filling your orders and just keeps going red, then you need to know where your stop will be, and that would be at the bottom of that wick there. So it's a little riskier play on spot, but I mean, that's how I would play if I'm trying to play KASPA. I would take my 5% discount and say thank you. And because it looks like it has a strong chance of continuing going. But if you're wrong, though, let's say your average entry, if it does just keep going down and you get stopped out right here, well, hell, your average entry was about here anyway. Look, 1.1.5% risk. And the risk of missing out is a lot greater than that, because this looks like it's going to do, it looks like it's going to go up pretty fast. So the risk reward, so the reward is way higher than, I think it's much higher than 5 to 8%. And usually you need your reward to be 4 times, in crypto, about 4 times greater than the risk. And you're only risking about 1.5% plus fees, maybe 1.75%. So you only need about a 6 to 7%, let's say a 7% move, and making a higher high. I think it would be more so from there. Yeah, that's 14%. Hell yeah. That's how I would play it. It looks like it's too bullish still. But the risk of being wrong is so low that it's not a big deal. It's almost, I mean, honestly, I'm attracted to this. If that does close green, I might try to get that 15% play. That's a really good spot setup. It's a really good spot setup. And look how regular these higher highs and higher lows are. I mean, it just looks really nice. And if you get stopped out, but it still doesn't go up, or but it still doesn't keep going down, there is history that this hangs out for about 5 or 6 candles, and then you might have to kind of base another entry off of that. Yeah, there are a lot of moments of pause over here, like this area here, it paused for quite a while. And these are 4-hour candles. That means like next day type of stuff, right? Or when you're sleeping type of stuff. All right, that's KASPA. They literally dumped BTC just to stop Chainlink's pump. It happens like clockwork. Kato. What now? What about Chainlink? I mean, Chainlink is one of the weakest performers of the whole bear and sideways market. Again, I don't think we're in a bear market. I mean, we're technically not. But we're in a sideways market. It's one of the weakest performers. So let's, but maybe there's something I'm missing. I'm not for sure. So that's my knee-jerk reaction to what you said. 22, 30, BTC. All right, so let's go look at Chainlink. I mean, Chainlink took out its bear market, like it's on price discovery down. Just last month, it made its lowest price point ever. So, I mean, just kind of thinking about that, if it just made price discovery down last month, what pump does it deserve? I mean, you need to get investors confident in your asset before it truly pumps. And having made price discovery down new lows, even though it did technically use a previous resistance as support almost perfectly. Look at this. I'm going to zoom into that. I mean, that could give a reason for a pump. That is a pretty, but it is new lows too. I don't know. It's still new lows. And it still broke trend. So I would say trend out, it trumps this. It's more important than having come back all the way down. Although that probably was a pretty freaking good scoop. I missed that. That happened on June 5th. Dang. And it came up a little shy. Looking at on the hourly chart, that was a big sell-off on June 10th. Man. So it just lost 18% in an hour. After that, went sideways for 10 whole days, couldn't recover. Had a 25% run, that's pretty good. And then went sideways for 20 days, kind of like Bitcoin. Broke highs on another 15% run. Honestly, this is starting to look pretty healthy. I don't think... I don't know. This current run looks honestly just like KASPA's. I still think it's going up. Which means Bitcoin dominance really should be going down. Oh, hold on, maybe I'm missing something. I did forget to look at Bitcoin dominance. Darn it. No, it's still going sideways. Huh. Well, the rally since June 10th actually looks pretty freaking good. So what you want this to do is it's forming a tilted... It's trying to get out of this, you know, bottoming inverse head and shoulders pattern in this channel here. So I would say as long as it hasn't broken down and out of this, it's actually okay. Because it's in an upward trajectory and it's just a slower pump than what you want. Because remember, this coin doesn't pump. Like it's not known to pump. It's not a Cardano, which pumps and dumps. Like its entire bull market from 2020 up to 2021 was only a 5x. The whole bull market. And a 5x, I mean, the crappiest shitcoin on earth did that. And sometimes it did it in 5 days, not a whole bull market. So maybe I'm not for sure what you're talking about. But so I would say to that, this recently made price discovery lows. There shouldn't be enough, you know, big money willing to buy it off of those new lows. That doesn't create confidence. I would be more confident if it were breaking new highs. That brings confidence. Blue sky breakouts create a lot of confidence, and oftentimes that brings a lot of buyers to the table. But making a bounce off of a new low, I don't know. However, within there though, this little rally since I think what is it, month and a half long now? Yeah, 40 days long. This looks pretty healthy. Let me look at the indicators. The daily still in shape. The daily RSI is still above its EMA, higher highs and higher lows. That's all good. 2 days, very good. 5 day looks fantastic. Weekly looks like it could be just getting going, but there are no bearish signs there. Going the other way, 8 hours pulling back, 4 hours pulling back. But there's nothing alarming or bearish about it. So unlike KASPA, I think I would rely on the structure on this one, as opposed to an indicator. I think as long as it's above that line, it's still technically short-term time frame bullish. Yep, that's how I would interpret it. Who would have thought the more legitimate cryptos would be the ones that get, you know, just the least attention on the charts? What's up, homie? You ever check out BABcoin? Yeah, I mean, during the last, during 2021, I think BAB was looked at a few times. Isn't that the one that was so low on value versus Bitcoin that it was like zeroed out at the bottom? I thought that was it. No, this is not the same thing. Wait. No, that's the same one. BABcoin. Yeah, this is it. Okay. BAX. Oh man, a 19x. That is a serious. Now this moves. Chainlink didn't even do that in the whole last bull market. Wow. What the hell is going on with this? It just put in a solid higher high on the daily RSI and got above its EM. It might be ready to go again. It could be ready. However, it would structurally be a hell of a lot more convincing if it could get over this area right there. I don't think you're going to have a breakout until that's passed. So I would probably, so for this token, for the next move up, I would simply use that line. over any indicator, over any horizontal. I mean, hell, it could come down this and break this horizontal here and then just go kaboom. I would just, honestly, I think this is the most important line for this one. Now, if it gets above there and fails and does a lower high, then I would have to reassess, and maybe the next most important line would be from roughly all the support and resistance area here. Somewhere like this, you would draw a box if it doesn't get follow through from that breakout of the descending line, and then you'll realize, oh wait, what trumped that descending line breakout is all of this, and it needs to get above here and bounce, as opposed to the most important thing being this descending trend line right there. But I honestly would guess, with how strong that was at 19x, I think this line should be what creates the next move. However, the second most probable is it doesn't, and it just needs to take some time. It doesn't get a lot of continuation above it, and then it truly just needs to use until buyers step in. It's 00004. Needs to be used as support, as the second most likely situation that stimulates the next move up. Now, if this son of a gun, comes all the way down to here, then that would be quadruple 095. Then okay, you're probably looking at lower highs at that point. You're probably going to use this 00004 area as resistance at that point. But even taking out this area here is okay. Another lower low, but then bust out, that's fine, because look at that, that's a higher low. It's a higher low to this one back here in January 2023, and that'd be like a weekly or a bi-weekly higher low. Yeah, so that'd be a bi-weekly higher low, and that wouldn't be, it'd be a weekly lower low, but it'd be a monthly higher low. So it'd be a monthly higher low. Those are the two ways I could see that played out. And those are the two most likely items that will create the next strong move. Yeah, this one's got an easy read on it. But it's not going to flood down. Like, I don't think it has a chance of flooding down until it takes this. If it keeps walking down, or I should make this red, because that's resistance, and green is support. All right, if it keeps walking down the trend line and goes like this, well then, I mean, you might start seeing a flood down to the next horizontal there. But I mean, if it can bust out of this triangle here, I guess, since you have a triangle, I mean, it's going to be it should be aggressive. That's a fun one. 19x since the new year. I mean, I don't know I don't even think KASPA's done a 19x, has it? All right, since January. 9x. That's pretty high. I don't know what the hell that thing has. It might just be where people go to trade, almost like a Pepe coin. It's just where people navigate, or it might be something real. But those are the only two types of tokens that seem to be getting on the hot list. Well, speaking of hot list, look, I just KASPA and Pepe, like I was talking about. Like some of these coins, they get so KASPA's not one that I'm about ready to mention, but Pepe is. Pepe is one of those coins where it's almost like Luna Classic. Even though it's trash and no one really wanted to hold on to it, there was a lot of liquidity there. Liquidity meaning people can buy and sell exactly where they want to buy and sell with fairly large sums of money, and you couldn't do that on any other asset. Therefore, people didn't trade them as much, right? Like people with $50,000 you can't buy and sell Cardano at $50,000 with any sort of leverage on almost any exchange without moving price pretty significantly, because there just aren't that many people interested in trading it. And so you get these playgrounds like Pepe, and then it has a lot of price action and a lot of liquidity. And it's just it's more of a playground that everybody's playing on right now, as opposed to being something that's technically legit. And that is my understanding. But KASPA, I think it's actually legit. It's not just a playground. But its legitimacy might be making it a playground on top of its legitimacy. That might actually be happening. Which is why those two have been staying on the trending list. Trending is essentially like what's being bought and sold a lot. It's essentially like good liquidity areas. That's what that is. And there's Luna Classic. So I guess Luna Classic is still a playground. 42 million volume? That's more than KASPA. Oh my gosh. Luna Classic is still a playground. Dang. Wow. I'm glad to see Bitcoin on the trending hot list. Bitcoin is trending, baby. Chainlink is trending. 576 million in volume. That's some pretty serious volume. So something is going on with Chainlink. So your comment might be right. That means there's a lot of selling versus buying. That means there's a lot of buying and selling. Huh. So what's going on with Chainlink? I think what you just... So that volume means what you said might actually be 100% legit. Maybe there was news. Chainlink launches cross... Oh, so they just launched something. That's a lot of volume, everybody. And somebody is selling hard into a lot of hard buy pressure. I mean, that's a ton of 24-hour volume for an altcoin. That's probably more in Ethereum. That's a lot of volume. All right. They want to claim to unlock trillions of dollars for the cryptocurrency space. So it's looking to become the first, it essentially wants to become a universal language that's used among essentially like countries. Imagine the world wants to come together. We need to speak the same language so we can have global commerce. We need one. It's almost like the US dollar, but for trade is the US dollar for now, which seems to be kind of getting messed up there. That probably will end fairly soon in the next 30 years. But instead, outside of currency, like a language, hey, we all need to speak the same language because aliens are invading and we need to get together to win the alien war. Whatever. We need a standard language so we can speak. Say they picked Spanish because that would actually be a great language for everybody to learn because it's so standard. And so what this is, it's a standard, essentially a language, operability language to essentially connect crypto. So if you think perhaps Microsoft and Apple, this would be the bridge between them, but you have more than just Microsoft and Apple in this space. You have Polygon, Ethereum, all that stuff. So this, which means the common denominator, the language between all of them, among all them all, will be even more important than a common language or a translator between Microsoft and Apple, because it's only two of them. It makes it less important. And they just launched it. Interesting. Because Ethereum is essentially an operating system. Kind of like, these are kind of like operating systems. I don't know what a good, I really don't know what a good analogy would be or a comparison, but that's what this is. Okay, but what does that mean? Okay, they say unlock trillions of dollars, but how? I mean, unlocking because everything's now connected, and the barrier to, let's see here. Oh, I'm seeing Swift. Hold on. All right. we'll be able to create a private public dynamic that gives access to traditional finance. Give digital assets access to traditional finance would be a better way to say that. So through this mainnet launch, we Chainlink will create a private public dynamic that will give digital assets direct access to traditional finance, which means that access equates to trillions of dollars. Okay. This will give banks access conversely, so giving tokens access to real world assets, then the banks or those real world asset tokens, calling crypto not real world. Oops. Whoever wrote this is not a good writer. This is horrible. Oh my god, this is horrible writing. All right, access to real world asset tokens. I'm sorry. No, it didn't. I misunderstood that. It is calling them real world. I apologize. To engage in the, it's still bad writing though. To engage in the chain space. Real world asset tokens as opposed to asset tokens that aren't real world. I just don't understand why they put real world there. What are they doing? I don't know. Okay, so this will in turn, so similar how it gave access to crypto, or it gives crypto access to traditional finance and unlocks trillions of dollars of money flow that way. The money flow can go the other way by giving banks access to the tokens, allowing them to engage in the blockchain space in a plethora of ways. Like what? Like put their information on it? I don't know. I mean, what ways? To manipulate the markets and make price go down? I mean, what other ways would that be? I don't know. So this honestly says almost nothing besides it's a mainnet launch. But sometimes, to be fair though, like even the internet, it connects everything. And when it was built, no one knew that you would be able to go shopping on it, get a degree on it. None of that was known. The only thing, I guess education was one of the biggest things, but not get an actual degree. But learning, and I guess like the creators of it and the pioneers of it, I mean, pretty much only knew that that learning and porn was probably going to be on it. That's the only two things they really were confident about the internet through the stories and the sources that I've read about. And so maybe, to be fair, I might be throwing a little bit too much cold water on this idea, because sometimes to pioneer something, you build it knowing it's needed, but you don't know how it's needed, and it really takes its own life form, but you can't guess what that life form. It's almost like creating a simulation of a universe. Like you don't know what's going to happen down there, but I mean, I created a simulated universe. That might be what's going on here. However, this article, I mean, it doesn't mention why this would be bullish outside of it mainnet launch, and the potential for banks to want to use blockchain, but they didn't even mention a single way. Like, why is it valuable to them? Like, why would banks, why would traditional finance space, Swift, Citigroup, and all that stuff, even though they're partnering with them, like, how are they gonna? It didn't mention one way they're gonna use it. So I'm playing devil's advocate. It could end up being a big deal because it is fair to say some of the best things built, no one knew what it'd be used for. So I don't want to be unfair. Outside of the writing in this the article sucks. That is fair. All right. Yeah, so that's a big news for Chainlink, and you're right. So there is the buy pressure from this is being met with a lot of sell pressure, but look, I don't know if it's the big bad days actually attacking it. Look, because even Bitcoin, all like this is pretty much all here. Actually, let me do this. Let's do total 2 versus the stock market. And look, the stock market's going up, but all of altcoins since last Friday have been so since the end of the XRP pump have been going down. So it's not just theys selling into chainlink, even though there is a lot of selling. All altcoins are like getting sold into right now. So this is total 2, or the market cap of all the performance of all altcoins minus Bitcoin versus the stock market. Yes, versus the stock market. And that's what this is. Did I do it right? Pretty sure. Let me make sure I did that right. BTC. Yes. Straight up total 2 divided by that. So while the stock market is breaking out, big money is getting their money out of altcoins in general after the XRP pump. Now they're saying goodbye, we're putting our money back in stocks. Not to a huge degree, but on the short-term timeframes, that's what's happening. So it's not just Chainlink, which you can see it in this chart. This is all altcoins divided by, or should it be minus? Oh, it is divided. Yeah, divided. Yes. Anyway, but maybe you're putting your tinfoil hat on. Maybe all of the selling into altcoins are because of the chainlink. I mean, that's tinfoil hatting. It's possible. But everything's being sold into right now. Crypto is not following the stock market. All right. Which could mean this is a great time to start buying Chainlink if you really believe that it's going to fly. It's just crypto's having a pullback in general. Okay, here we go. Harrison asks, entry targets for Orai. Okay, we spent a lot of time on that. Entry targets for Orai, 48. And 0x0. Isn't that one of the protocols back from 2017, 0x? That was supposedly going to be a big deal, but then it never got talked about again. Let's see here, but I'll go to Orai first. This has had a macro breakout. Similar to Bitcoin, and so this is staying up with the idea of Bitcoin. From the 15.5 bottom, this is done in 11x, which is stronger than KASPA. I mean, this altcoin did more run than KASPA's done the whole year. Now, has it already been pulling back? Yes, but its performance this year, at its peak, is higher than what KASPA's peaked out. So that's just for a point of relativity. This has had some pretty serious buying pressure. Which, so you wanted pullback entry target? Let's see, what'd you say? This one's gonna be a little tougher because if it falls from like the perfect entry, which is the bottom of this triangle. I mean, right here. I mean, about where it's at, if not a little bit lower. But what it's going to do is this. It needs to decide which way am I going. And it could wait until the end of August to do so. So technically, I mean, if it can stay in this triangle, then around 2.25, and between 2.25 and 240 is where I would want to get it. However, if it starts putting more, yeah, I will stick with that. Yep, between 2.25 and 240 is where I would, if I were interested in this, I would want to pick it up, but I would do it with the knowledge that so my entry is also the probability flip point. Okay, that's not it's not ultra common, but it's happening on Bitcoin right now too, which means, it's happening on this also, which kind of makes sense. So if it goes a little lower than your entry, that means your next entry is way below, so you know to bail quickly, which even though that sounds inconvenient, it's really not. It really isn't. That means it's probably going to come down quite a bit to hit this, to retag this area. Which it did not prove this as support yet. That's a 50% drop. And so if you were average entering around this area, let's say average entry around 232, for example, and you know to bail within 3%. Or at least half bail. And then, if it goes down a little bit more, then sell into the next rally up onto a lower high, something like that. But I would definitely want to be half out at that point. For only 3% risk. So that would be, and then if that breaks down and you get stopped out, which I would strongly recommend allowing yourself to be stopped out, because the next drop down would be much lower, perhaps 50% lower. In the event Bitcoin really does fall out, so then this could happen without Bitcoin crashing. Bitcoin can just pull down to 26K, but Bitcoin dominance skyrockets and altcoins go way, way, way down. It doesn't mean something catastrophic for crypto. It just means something catastrophic for the liquidity of altcoins. There isn't much interest in money flowing into altcoins. Rather, it's going to Bitcoin itself. So that's real. Honestly, it's at a perfect area. I enjoy it. It does sound, the way I say it, it might sound to you that it's inconvenient. Like, oh, I want a better risk than that or better odds than that. Well, if your odds, honestly, it's either going to break up and out or it's going to break down from here. Few shades of gray in between. It could have a fake out, dip and rip, some things like that happen. But in general, it's either going to break up and out or break down and below. So it's actually not a 50%, but you only have two options, right? Thinking of it that way, outside of probabilities, well, right now it's above it, so I would guess up. But at the exact point I'm guessing up, if it just goes tiny bit below it, I know to be out. That's honestly the perfect area. Yeah, I like those types of trades, simply because the risk is so low. So if your risk is exceptionally low, you can make, for example, some people make a living. And what I'm about to say is very important, by the way. If you haven't heard me say this before, what I'm about to say is it could blow your mind. And it might sound impossible. So that's at 54, 30, 20%. All right, so you see a lot of, so here's why in basis point, and here's why this is, having a 70% chance of this breaking up isn't needed here. Even if it's 30, I think it's still worth the trade. And here's why. So a lot of the, people who analyze price, sell courses, all that stuff, the way that their strategy is, they go for the highest probability trades, perhaps with looser stops to give them the most wiggle room possible. So with high probability typically means by default, you're not doing as high of leverage, and or you've somehow managed to have a decent sized wiggle room. Okay, you're not setting stops like directly underpriced by 1 penny or whatever. You can't, because then you wouldn't have a high percentage rate. So there's a balance between how big of a cushion of your stop and how high that probability can be. Does that make sense? All right. And so you always hear people say 68% and 70% and all this kind of stuff. So just realize that means when you're wrong and you finally get stopped out because you have a big cushion, you're taking bigger losses. But it's less often on a percentage basis. But when you do, they are bigger. Right? And so there's another type that I haven't done this yet. Oh, hell, I couldn't even right now because Bitcoin's not doing anything. But you could do this in a bull market. Like just with candle structure or anything, as long as Bitcoin's really, really volatile. And you can do it with stocks that have earnings. So a lot of people do this strategy on earnings calls. They don't trade the same stock. They trade other stocks with certain signals, and they only trade the same signals along with earnings reports and stuff like that. And they're doing the fundamental research. But in this strategy, a lot of people, they base their livelihood, and they do extremely well off of trades that have a 20% hit rate. But they get stopped out immediately if it doesn't pop right then and right there. You're automatically out, take almost no loss. So you get 4 little losses, which could be even less than one of the looser stop losses of your 60 and 70% trades. As long as you get out immediately, because you're only looking you're guessing the moment it's going to go pop like that. And you wait and wait. You're not building a position down low before. You're not doing any of that. You're waiting for the exact moment, which means it's more computer time, though, unfortunately. Those people are hunting. However, they're always looking for the same setups at market open, like with earnings reports. So they're only at the computer for like an hour and a half. That's honestly the nice thing about traditional markets. I mean, everybody comes in at 9:30. It's actually kind of a good thing, and that's part of why crypto is so boring, because there's no big one massive playground where everybody comes at the same time. Like everybody going to school at the same time, getting off the bus. That's what happens in traditional finance. But crypto is more like Las Vegas, it never sleeps. So people can go out and do whatever they want at any time of day, and things are more dispersed. Does that make sense? All right. But in general, the difference between those two mentalities is why this is a pretty good setup. Okay, here we go. Orai. And you mentioned one other, which is... I'm going to have to start going faster, guys and gals, sorry. OXO or 0x0. I'm only seeing this on wrapped stuff. Oh, maybe it's not 0. Hold on, maybe I was typing it wrong. No? Is it just 0x? Is it this? This is 0x0, just like you type versus the US dollar. It just came out. I think this is what you're alluding to. 0x0. Those look like zeros to me, so .ai. I don't know, give me the ticker, man. I'm not for sure which one you're talking about. But since February, that sucker's nothing but up and sideways, accumulating at its top. It looks like this. Well, if this is it, it's simply it's just ranging. There's nothing special about it, and almost no one's buying and selling it. I mean, you can tell by these 5-minute candles that there's nothing going on here. So yeah, I can't figure it out, man. I'm sorry. All right. Because there's nothing to look at there. That's not even trading. Okay, DCF says, I'm just waiting on a really nice altcoin correction, 30% plus within the next few months so that I can put my sideline tether into the market, keep building my USDT goal is at least, he has his own, he wants to get up to close to 30K saved on the sidelines for that moment. That, honestly, this is, that might end up being the absolute best play possible, because it kind of seems like if there is a next really strong drawdown, it seems that it'll be a Bitcoin higher low with altcoin potentially lower lows on some of them, which means 30+% drawdown, and that would end up being the absolute time, the next strong move down, if there is one. Assuming there is one, which I think it's a safe assumption, Bitcoin will make a macro higher low. However, I mean, there is an argument against that. I mean, it's actually pretty legitimate. So the idea that Bitcoin just doesn't come back down, and here it actually makes sense. So think about it this way. Back when Bitcoin, here, watch. Okay, BTC and all right, why Bitcoin might just go up only? Because during all of these, let's say this is the last bear market. I'm on the daily chart. This is back in late 2018 here. This is March of 2020 there at 4K. All right. So we're looking at about 3.5 years of price history from the top of 2017 when it hit $20,000, and we can still see the 64K top. So it's actually 4 years from top to top. We're looking at 4 years of price history. But right in the middle of this, when Bitcoin went sideways, I mean, look, Bitcoin went sideways almost the entire time. You see this? We are looking at 4 years of price history, and and almost all of price was in this, for at least on, yeah. Like almost all of it was in this box. See this side, this horizontal box? It's kind of weird to look at it that way, but it spent just a tiny bit outside to the downside, and then when it broke out, it never came back. Okay, so for the idea that, but over here though, here's a big difference. Here's the point I wanted to make. Why Bitcoin? It's possible. It just keeps going up and up and up and never comes back down. It is possible that plan doesn't work. I'm not saying it's the most likely, but if it happens, here's why. During all these lows, 3,200, 4K, and all that stuff, inflation for about 20 years had just been on insane lows. So inflation was not really in consideration here. But if you think about 2% inflation over a course of low to low over about 500 days, well, 2% inflation annualized, and bring it up to, I guess it's still 20% away from low to low. So it wouldn't have been actually the same. But let's say inflation during, from these 2 points, 3,200 down to 4K coronavirus, let's say inflation skyrocketed, the US dollar, and milk got more expensive, gas got more expensive, everything got more expensive. And Bitcoin price chart actually looked the same. And it still went down to 4K on that coronavirus dip, which is a higher structural low. But because the dollar was worth less, and a Bitcoin's still a Bitcoin, it takes more dollars in the hypothetical scenario, it takes more dollars to buy Bitcoin. That 4K low is actually more equivalent to having broken new lows. If inflation goes up and the price of Bitcoin goes even lower, that's like super duper bad. That's like ultra deep type of stuff, right? And the way to think about that is, I had a team leader say it pretty well. if inflation between 3,200 low and the 4,000 low in coronavirus, if inflation skyrocketed, if you had, let's say, 100 Bitcoin, or no, let's say you had 50 Bitcoin here at 3,200, okay, which means, well, let's say you had 100. So, 50, yeah, 50 might be enough. Yeah, small house, small ranch house in the Midwest. Let's say you had 50 Bitcoin at the 3,200 low, and you had the same 50 Bitcoin. You didn't buy or sell at the $4,000 low after inflation goes up. You have the same Bitcoin you never bought and sold, but inflation went up between here and there, and houses are worth a lot more now. At the 3,200, you could have bought a lot more house with the same Bitcoin than you could have back here because the price of houses has gone up so much. Therefore, this 4,000 low is actually more equivalent to something way down lower, like 1,800, something like that. Does that make sense? And now that we've had a like the strongest inflation in 20 years, okay, this 15.5 low, that might have been 12K or 11K. That might have been it. And we are looking at a V-shaped correction, and it's not coming back down. That is possible. That's completely possible. So just, I mean, heads up that is, you know, as bearish as I've been bearish in a bear market, and I've changed my tune, you know, saying actually, it probably since it bounced off of, it got this bounce, the recent bounce in June. After that strong bounce, I said it's more probable that the bottom's in. All right, slightly more probable, but you know, not 80% or anything, but it's a little bit more probable. Once I saw that reaction. So I don't want to misguide. So I don't want you to go in the future and look back in time and me being completely. I was pretty bearish until that big pop, but now that it's made a higher high, you know, you not only have to consider. You have to consider both things, like the ultra bullish case that we are looking at a V-shaped correction and it ain't gonna stop. Like it's going straight to 50K, then pulling back to 35. That could happen because this right here could have been 11K. And had it hit 11K or 10K, what would you have expected to happen? For it to triple, like it probably would have gone like a deep move down and just skyrocketed up to 30, 35. A triple, right? Well, what's a triple off of about 16? That's close to, you know, that's about 50K. More than that. No. No, that's 45K. I'm sorry. So off of 15, but it was actually 16. Right? Yeah, I have 15.5 lows. So it's around 50K. So this might go up to, isn't that what I said earlier? 50K down to 35, something like that? Yeah. So that makes sense. So it could go up to 50K because this was the 11K low. It hit it if you adjust for inflation. So I want you to consider that, like, you know, any type of pullback, it might be not a horrible idea to at least have some. I wouldn't say up to half or anything, but it might not be a horrible idea. Because that situation is possible. It goes up to 50K first. Now, on the micro time frame, does it look like that's what's happening? Not really. Because it's falling out of this 8-month channel for the second time. All right. TMC on the weekly and maybe Doge. Okay, so we're looking at stocks, metal company. And Doge. Damn, just like an altcoin. Came out on NASDAQ in 2020 and in 2021 had a 95% correction. Went sideways for a year. In about the 90% correction zone, not the wick low 95. Okay, I see it. As long as it can stay, so I think the monthly chart might be a better way to look at it. And then once you have your monthly level set, then kind of go to whatever time frame you want. But I would mark off about $1. Here, actually, let me make it exact. $1.15. And so I'm gonna mark that bad boy off. What? Okay, so after this strong monthly candle move, yeah, low time frames aren't going to help. It might do something like it did back here to create a little bit of symmetry. It went on this line and just chilled for about 5 months. So it could end up having a red candle, green candle, red candle, green candle, green candle, boom. Something like that. Something like that. And as long as then you zoom in to the low time frames, like 1 hour or something, whatever. Oh, I just moved the damn thing again. As long as during those months, it in general on the very low time frames, 1 hour, 5 minute, whatever, it's mostly, maybe it goes below it, but then it pops right back up. That's the key. If it goes below, you don't want it to hit its head on the way up. If it keeps doing that and rides, I mean, it's got a good chance of really being quite strong. But it seems like a huge pullback. But on the monthly scale, I mean, it broke out, and now what's wrong with it correcting? Even though it is a 60% correction, that's just forming a bullish monthly range. And I know that sounds crazy, but because it had a 95% draw, and then it just like went 3x, it created a ton of space. No, it went 4.5x. So that 60% drawdown is still technically, it's long-term bullish, only because the strong move down mixed with not as strong, but a 4.5x up. The space is huge. It's like playing basketball. So basketball, It's like playing soccer versus, or football. So football, or soccer, versus indoor soccer. Like this, so not only is this outdoor soccer, but this is outdoor soccer on a field that's like 10 times bigger. Like the game would be a little different. The strategy would be a little different. That's essentially what this is. So to try to help your brain like get wrap it, the idea of 60% drawdown, that seems like a lot. But if it's a bigger soccer field, what used to be a really long kick on the normal pitch or soccer field, it isn't anymore. And so 63% down sounds like a big kick, but because the field is big, it really isn't. And hell, if it stays over 116 and can form, and then without all that monthly shenanigans and just hold a daily uptrend, well, I mean, as long as it holds a daily uptrend, then I would assume it's just going to keep stair-stepping. And it could stair-step. I would say a failure pattern slightly above about $4, go a little bit above, maybe even hit like 560, and then potentially come use $4 as support, or like $3.75 to $4 as support after that. Pull back, get back on top, and then keep going. So if you don't see the monthly and all that initiated the pullback, and therefore the daily stays in an uptrend, well, then it might go straight to 5 and change, and then land on the high 3s, low 4s. Yeah, it's a pretty strong reaction. Like that's a lot of buy pressure. I mean, hell, what was happening here? Like this had to have been like 10 and 20% days. That's a 20% single day. Wow, just over and over. So what is happening here? Another 17%. Why are we in Bitcoin? Let's go into this. Jeez. It's having consecutive 20%. What is the volume on this son of a gun? What? This looks like a great place to be. So there's news. Something's happening. I don't know if they just got a government contract or they're opening a mine that they've previously scouted, or there's been a demand influx and they won the contract to supply the metals. There's something going on there. And depending on whatever that fundamental analysis is, that buy pressure might not slow up. But then again, if it does come down here and it starts breaking 116, it's over. All right. Cool. And then Dogecoin. All right, I'm going to probably have to wrap up, unfortunately. I mean, in a bear market, Dogecoin has been able to hold on to the 6 cent area for over a year. That's pretty good. I honestly can't... I am super surprised it's still this high. But what this means is somebody's interested in this with money. Or somebody's, or... darn it, I think I might have to refresh my screen. There's a... There is a lot of buy support on Dogecoin. And at this point, even if Bitcoin makes an aggressive move down to make a higher low, perhaps let's say, for example, at 25K, I think Dogecoin will hold up strong and it won't make lower lows for this cycle. I don't think it'll take out 5 cents. Because it's been able to hold this for so long. I mean, it might bounce its head on 5 cents again, but I don't see it making aggressive lower lows. Now, if Bitcoin does have a meltdown, which is possible, but with high inflation, it might be less and less probable for that to happen. Because again, 11K might have already been hit, right? With the 15.5 because of all that inflation. But if Bitcoin melts down, then you're going to be able to see it by going back to 2020 and to the year of 2020 where it made a low and a higher low, connect those, and you'll be able to see Dogecoin go below that point, which is close to 5 cents now. But once it gets trapped below that trend line, it's really going to melt down. But I don't see it melting down until it goes below there. And I would guess if Bitcoin makes an aggressive move down to 25K, it will stay above that green line. Yeah, it's honestly, I cannot believe Doge is still this high. This is unbelievable. I'm not disappointed about it because it's a monetary coin technically, but and it's got pretty good network security because it has merged mining. It came up, it actually invented the core team invented merge mining, and then other coins, some other coins copied that idea. But I think it piggybacks off the network hash rate of Litecoin. I think that's what it does. All right, Tim, isn't mid-July to August kind of seasonally pumpy? And then September is usually a red month, and November. Take a look at BTC chart over year prior to halving, please. So take a look at BTC chart year prior to halving, please. I think things will rhyme again. Yeah, I already have a chart for that. And it is in the zone. It is in the zone. It's 200 to 400 days before bull market is when Bitcoin, the last 2 cycles, has moved. So this is my clean chart where I typically only put on my major candle closures. I can get rid of this. And oh, son of a bitch. All right, well, April of 2024 is the halving, around April. So let's just do 10th of April. Boom. That's the halving. So historically, the bull runs really start charging around 400. It begins to get bullish. It doesn't start doing exponential stuff. But 200 days... So here, I'm going to mark off 200 right there. From 200 to 400 days before the cycle start, or before the halving. And then, so it's essentially a time Goldilocks zone. So kind of like the Bitcoin going under the weekly 200 EMA has been the Goldilocks zone, and as of now, it worked well too. Every single time. So from an up and down standpoint, the Goldilocks zone for Bitcoin is under, price being under the weekly 200. If you've ever bought Bitcoin under the weekly 200, it's always been a great idea. Or right at the weekly 200, because I think this is the first time it ever went under. But around the weekly 200, which was here and here, at 4K and 3200. So in this zone vertically, that's the Goldilocks zone essentially is what he's saying, or referring to. And right in this zone is when not fireworks necessarily. Again, this is not where you see that's a bad color. And put price on it. Rather, it's when you see things like this. So I'll put now the halvenings. And I'll just do 300 days before. So again, the last one though, wait, is this the halvening? So technically, the last time there was a halvening, Bitcoin was not bullish until then, but around 400 days, so this is only 300 here, it started getting bullish around the 400 zone, but then had a really choppy ride. So the last time it actually had a massive drawdown within the Goldilocks zone just before the halvening. So if it rhymes, a market crash down to 18 is, if it's going to rhyme, it's still, that's what happened last Goldilocks zone, right? I don't know what you were implying, but I mean, but the last time though, or the time before that though, is when it did just kind of keep trudging forward. So that's about 300 days. I'll make a box like on both sides so you can kind of get the gist of what was happening there. Maybe from there to there. And that's the Goldilocks zone here. And then it was followed by a bunch of sideways until the halvening. So if this were to repeat, but with inflation, I mean, honestly, there is a case for this to happen because the dollar's worth less. In 2019 dollars, Bitcoin might have already hit 11K. I'm not joking. And so that's what price would look like. It would just float up to 50. I mean, 50 plus K. Look, like there are no big moves down. And that's what I was talking about earlier. So if it rhymes, there are two different things. I mean, just before the last halvening, it did crash. Yeah, it was coronavirus, but that's still there's only two Goldilocks zones. And that's what happened in the last one, right? All right. Anyway, so a couple of drastically different things happened in the Goldilocks zones. And those red lines are the exact halvening dates. All right, that's Orai chain. It pumped so much because it caught the AI hype cycle. Totally useless crypto, in his opinion, not a long-term hold. Yeah, and so that's the name of the game in crypto. You do best by riding the waves of the flavors of the month and then selling. That's literally historically how you do the, like buying and holding anything is not, it's never been the name of the game in crypto. You buy what's hot and you sell it. All right, so thinking near going all the way down to 88 cents might be way too low. Yeah, it might be. Let's see. I mean, structurally, it's not. It did just form. It's in a daily no trend. Higher high, higher low, higher high, uptrend, broke the uptrend, lower low, but a higher high. That's a daily no trend. It is above this zone for the first time ever, which could signal that it's too low. It's only 50% down. I don't know. It's probably less likely at this point, but I don't know. I still think that's fairly reasonable. Like, for example, it would not be surprising if that were to hit. Now, would it be super surprising if it didn't hit? No. Not at all. Like, you know, because it might not be probable that it hits. But if it does hit, I think it's very far from surprising. Because it's within the realm of reason, I think. But yeah, it did make its way out of this purple zone. So that in and of itself does make hitting 88 cents a little less likely. And it's trying to use it as support. All right, so that was near around 129. Uh-oh. All right, and then KDA and FLUX. All right, I'm gonna have to get off of here after KDA and FLUX. Okay, so short-term time frame, KDA did break below this. That's not good. So I would say KDA has a strong chance of coming at least down to 55 cents again, and has a decent chance of doing a double low around 48, 49 cents. Because it went under here, I don't think this horizontal will hold it. I think it's going to have to recruit people with going a little lower, getting some higher highs, higher lows, and then going. So I think now that it's below there, with the assumption that it gets rejected, which it kind of already has, I think 55 is on the cards next. All right, that's KDA and then FLUX. Come on, FLUX. It's really trying to hold on to this. So if you were to accumulate it here and it drops, it's going down 40%. If you wait for it to come up here and then pull back, you're looking at buying it 56% higher. So no matter what, you know, if you don't get any now because you're waiting for 40% down, then the next best chance to buy it is 55% up. But if you do get it now and you're wrong, then you're going down 40%. It's kind of a rough option. So being wrong here, it would be a bummer. Whether or not you're guessing it goes up now, or if you're guessing it's going to go down now. If you're wrong about either, the consequences are pretty big. This one's tougher. And stops would be tricky for this too, because it could do a dip and rip. A dip down to 34 cents and be perfectly bullish still. It's really boom, because that's the bottom, you know, that's the bottom origin line. Or I guess the new bottom origin line. And it does have a habit of, you know, crushing through origin lines and bouncing right off of one. This one's harder to play. This, honestly, FLUX might be the epitome of a coin that the time based DCA, it might be among the best options. So instead of worrying where it is up and down on this chart, you're DCAing on time. So weekly, like, you know, for example, $10 a week, $100 a week, or whatever is, you know, whichever floats your boat. Or even on a monthly basis, but I mean, I would say bi-weekly at the longest frequency is probably what I would probably do it by every 2 weeks. No matter where it is, you just pick up a little bit more until your DCA is full. And I personally would calculate when my DCAing is done. I would try to calculate that to be around March 1st of 2024. That's my personal suggestion, because I think if there is any catastrophic downside in crypto, the dust will have settled likely by around early March or even February of 2024. That's my educated guess. It could be far from the truth. Maybe there's something devastating, but that's the way I would do my time-based DCA. So therefore, let's say if I had, I want $10,000 of FLUX, right? Well, how many bi-weeklies, so how many 14-day periods, right, between now and March 1st? And let's say, whatever, it's like 7 of them or like 5 of them or something. Well, every bi-weekly, you're hitting 2K every 2 weeks. Two for five bi-weeklies, something like that. Or you can split it up into weeklies. But then you have to figure out how many weeks and from now until March 1st. And then let's say they're, I don't know how many it would be. Let's say they're 15 weeks or something like that. By 15 and whatever, $750 here, $750 there. Time-based DCAing on this one. Yeah, the consequences of guessing and being wrong either way are pretty drastic, and the consequence of not doing anything and waiting and it goes up is also pretty drastic. So therefore, I think time-based DCA is probably among the better solutions for this one. Because in the end, you're just accumulating at the end of this triangle area. So if you can envision all of this here like that, you're just, no matter what, you're accumulating in this area based on time. All right, I am out of here. I do have the timestamps, so we will see you on Thursday at the same place, same time. We'll see you on the flip side.